Good afternoon and welcome to the Trade Stylist. This is episode number 2. We discussed the week 14th, January 2024, and let's look at how the market shaped up. So, once again, we're trying to craft your trade and keep it simple while doing it. So, this is episode number 2 for the second week. Of course, we start with the risk disclaimer that all views that I present are personal and understand that all of these investments have market risks. So none of the data points should be taken as market advice, and that in commodities, typically you have a higher risk of losing money than even your invested capital. So numbers also may not be showcasing exactly live data because of course this coming in after market closing, right? So I'm DJ. I look after trading. I'm here to craft your trade, and you can find me at the trade stylist. And may the trading gods be always with us. And that's my trademark. So we start with the market update, looking at how the markets moved in the past week. And we start with Cocoa Robusta, first of all, which was down by 1.9%, stopping in at 29.47. It was, as you can see, it was earlier during the week that we got the highs, and since then the market has been moving lower. Arabica almost similar, down by 1.5%. Cocoa London, on the other hand, gained back 2.6%. Cocoa US 2.7%, and they're again trying to hit on the higher side of the ranges at 27.67 and 43.16. Orange juice dropped by almost 10% versus the previous week, um, and is still on a higher note overall, but definitely last year was a downer. Cotton maintaining its slightly bullish momentum, as we spoke about last week, with a growth of 1.2%, and sugar once again pushing upwards to the higher bands at 21.66 with a 2.6% growth. Looking at the grains portfolio now, almost everything was bearish except for soybean oil, which grew up by around 1.7% to land at 48.44. Rest corn down the week 2.6%, wheat down 3.1%, soybean down 1.9%, barely holding on to the 1200 figure, and soybean meal roughly down by 1.8% to close at 362.8. YTD numbers, cocoa improved over last week. Sugar also improved over last week. It's right now cotton, which is down roughly 6.4% from the start of a year back. And all of the grains definitely below what they were a year back, which typically is good news for cereals inflation. But on the other side, for soft inflation, I think this is more or less killed by almost 50% on an average higher prices for cocoa, coffee, orange juice, and only dropped in by a little bit of Arabica and sugar. So let's look at what the market is talking about, right? This is a section we call trade speak. So we start with Robusta, where we can see that the market has been sort of dropping back, and I think it's a pressure that is coming in from Arabica as well, and they're going sort of in tandem. These numbers are still very far above what they were in the previous years. So there's still a lot of room to play either on the upside or on the downside. But right now, for the past week or so, it's been slightly bearish. Cocoa, on the other hand, has been gaining momentum. It dropped a little bit last week, but it gained back, and there is definitely potential that it would go up and hit these numbers on the highs again. And we can see that continuing in Cocoa US, where it moved up by 2.7% to land at 43.16. Orange juice down by 9.9%, as we spoke about in the previous slide. Sugar, on the other hand, again, maintaining a bullish momentum. The overall soft complex has been doing well, and we do think that it continues to be supported going into the market, as probably most of the funds flow out of the grains has been going towards equities and softs. And we'll see that a little while later as well. Cotton slightly up at 1.2%, with the last day of the trading being the highest number, which typically is bullish from the market. Corn, more or less range bound, slightly down bearish. Wheat, again, definitely bearish, still continuing on the overall market trend for this year. Finally, we look at soybean oil, soybean and soybean meal. WASDE definitely hit soybean down. It barely held on to the 1200 number mark. And there was a danger that it would probably breach below that level. Potential is that the market still goes down below 1200. Soybean oil, on the other hand, has been showing a little bit of bullish momentum, which I had probably written about, that very few deliveries for soybean oil were posted during the last delivery notice period, and something that we should keep an eye on. Soybean meal, on the other hand, has been sort of facing resistance and bordering around 360s, 362.80 close the week. So we go into trader peak, which is what are the points of interest that we look at. So definitely it's going to be WASDE. WASDE is the supply and demand estimates, and this one was a big one. So if we look at what the USDA December figures were, which are in the last column, the market estimated that the crop size would be 15.234 billion bushels for maize, which was increased to 15.342. Yield was also increased to 177.3, and acres slightly reduced from 87.1 to 86.5. The fact is that the yield numbers were higher than the highest trained estimates. And in fact, even the production numbers were on the higher side of the trade estimates. Quarterly stocks definitely are sort of within the range. None of them breached either numbers. So I think though we're sort of within the estimate numbers. Going forward, we look at winter wheat seedings. Again, sort of within the range numbers, except hard red winter sort of towards the lower end of the range. But impact is sort of limited, except for white winter wheat, which is slightly a smaller crop in total. And that's coming in sort of on the lower side of the trade estimates. Ending stocks have been increased significantly for corn from 2131 million bushels to 2162, which was quite high bit higher than the trade estimate. Soybean stocks again increased significantly, which was heavily bearish. And then wheat stocks slightly reduced. So the market did not exactly expect the wheat stocks to fall. But funnily enough, even after that, the market did react a little lower. And I think this is basis better trade reports coming out of the Black Sea, and probably a little more understanding that there might be reserves held back, which have not come into the market per se. And finally, if we look at the corn year-ending stocks, the trade average guessed at around 12.4. On an average, 12.34, 12. But the market actually, USDA gave a data of around 12.8 billion bushels. And that's quite a high number. Soybeans also slightly higher than what the trade estimated to be, and same for wheat. So all year-ending stocks look to be going to be higher than where it was estimated to be, and crop sizes definitely look to be more in terms of where the market expected them to be at the end of December, which should be a bearish state of mind for the market, and at least give the market a little bit of downward push as we go along. For wheat and maize, that means that the trend still continues. Soybeans as well, there would be a little bit of pressure, but I do think we need to watch Brazil's and Argentina's weather a little more to take a more informed call on this. Moving on, we go towards the headlines of the week. So Nigeria, the Dangote refinery, which is long awaited, is starting production. It's active as we speak. USA prices for nat gas and power definitely have surged due to the blizzard. Oil rises as well after falling big on Wednesday after a strike on the Houthis in the Red Sea. And USA yields fell after a good PPI report. Good news with bad news is that container rates again are soaring after the Red Sea issues. And EU, looking at what happened with the war in Ukraine, have built a record number of wind farms over last year. And US market seems no pressure to slow down. And it posted a 2-year high over the good PPI data, and which also led, as we said, to the USA yields falling. Now we look at the upcoming reports in the coming week. First and most is the German GDP growth. Germany has been impacting a lot of markets recently, especially with the pressure that they've been had on manufacturing side. And on top of that, we have a USD GBP pair that we monitor quite closely because of cocoa. The UK unemployment rate, inflation, retail sales, all three coming out next week, and that's to be closely watched. Then China declares its GDP and industrial production. And finally, USA inflation and retail sales will sort of give us an idea of what the Fed's decision-making process might look like in the coming next FOMC meeting. So we look now into trading deeper, which is basically a deep dive into a specific commodity. For this week, the commodity is cocoa. So how does the market look like YTD 2024? And we started comparing from starting of the year in 2022. And if you look at this is the London futures market, and with the volume traded, the prices with sort of representative acceptable volumes have gone up almost double of what they were over last years. And while inflation does have a part to play in it, but purely numbers basis, adjusted for inflation also, this has been quite a meteoric rise in prices. As we can probably see from all of us, especially between the mid 2022s to the end of sort of 2022, and starting 2023, there was a lot of volume, and that tells you that the hedge funds were very active in going long the market at that point of time. And this is London. Cocoa also trades in the US market, which is ICE New York. And if we see, it is sort of similar trade pattern in the US market as well. The only thing is, while the London market had started rising quite early as of 2022, the London US market had actually dipped for a little while towards the close of 2022 Q3 ending, Q4 beginning. But since then, it's sort of continued on a meteoric rise. And the hedge funds were also very active and have been quite active till almost Q2 2023. The volumes till now are going on, as we can see it in the traded figures, the long bars, and they sort of tell us that the market has still potential to continue on the same side. And there are some more reports that we will go into to sort of analyze this more. But this gives us an idea of how the prices have moved on what kind of volumes. And the volumes are all sort of in multiple thousands. So 250,000 is the peak. And as we can see, it's 50, 100, 150, and so on. So let's look at the supply and demand overall for the crops that we are looking at today. So the opening stock of cocoa, in our opinion and sort of my understanding, was roughly 1.7 million metric tons. Um, and then Africa as a whole would be producing somewhere in the range of 3.18 million metric tons. The Americas would come in at a million metric tons, and Asia behind at around 275,000 metric tons. So the production number, in my opinion, would be somewhere around 4.5 million metric tons, which is quite a bit lower than where it was. Demand in terms of processors comes at around 1.75 million metric tons from the ECA. Africa grind falling behind is around a million metric tons as well. Asia uh, is 1.2 million metric tons, and then South America at 700,000 metric tons roughly, which gives us a demand number of around 4.8 million metric tons, which leaves us at a stock to use ratio of less than 32%, in my opinion. And that leaves us at a closing stock of around 1.385 million metric tons, which is a very, very low number compared to all the last 7 or 8 years that we have seen in the past bullish sides of the cocoa trades. And this is over the last 20, 30 years. Um, the 8 bullish years, this is probably the worst number in terms of closing stocks and stock to use ratios that we have come across. If we go into a bit more detail on the S&Ds, we can see that majority of the crop that's getting hit is in Africa, um, Cameroon, Cote d'Ivoire, Nigeria, Ghana, and Africa. Others are the ones which have been widely impacted. Uh, Others as well, South America, a little bit lesser, Asia, a little bit lesser as well. But while the demand due to inflation, prices being high, has been hit as well, the grind numbers have been slightly negative, except for those in Africa. Overall, it means that the grind and the processing far outpaces the requirement for beans, and that is putting a lot of pressure on the market overall. And this then becomes a fundamental reason that where basically demand outpaces supply, and while demand has been decreasing a little bit, the supply has reduced by almost 25% in some countries, to an extent in some countries of 35% as well, which is what is impacting the market in this manner. Uh, Looking at the market movement over the last sort of 7 to 8 years, we see how the seasonality in terms of the 4 quarters the market typically behaves. And if you see this year, 2023 has gone in a very, very different direction than almost every other year. 2022 is sort of the only year which comes close to following a similar direction in these many years, which is sort of tells us how bullish the London market has been for cocoa. And let's see how far the market has moved in the US market as well. And once again, we find that the US market was sort of also matched in direction a little bit with the 2022 market, but not to the same extent as was matched in London. In fact, 2021 was on the higher side of the market as far as US was concerned. And typically that was due to a supply chain issue. Um, and the parity, in fact, was there to deliver to the US even from Africa at that point of time. However, this entire year of 2023, I think, will become a year that will be studied for a long time for cocoa, especially with this meteoric rise. And how to manage risks in this kind of movement is what needs to be very deeply seen. I now look at how the market seasonality has been in a slightly different way. And while the display size sort of limits my ability to showcase to you how this market has been moving, let's just look at how every quarter the prices seem to be moving in a similar direction, and whether they have moved away from the mean which is the center of the crop, sort of, on this radar chart. And if we see more or less the market movement in Q4 and Q3 are the ones which are sort of extended. And that's primarily because cocoa coming out of West Africa, which accounts for more than 60 to 70% of the global crop, comes out during the 6 months of Q3, Q4 and gets shipped in Q1. And that typically is when the buying in the physical market or the selling in the physical market also starts becoming quite active. And this now can also be seen in a very similar manner in the other market as well, where we can see that, yes, this is where the market has been most active and sort of extended is Q3, Q4, same on the US side of the market as well. So typically, if you are a participant that's coming into the cocoa market, what this tells us is that more care needs to be taken from Q3 of the year towards a price risk management side than probably during the rest of the year for this commodity. And till the supply chain problems are not resolved, this would continue to happen. Next, we go to Tradecraft, which is what we are looking at for putting in positions and what I would probably personally be trading. And again, this is not market advice, but this would probably be what my position would be going into the market this time. So Cocoa London still looks bullish. And I think actually this should be Cocoa US. As long as the market, I think, does not breach 41.51 on the downside, I do target a 44.70 on the US. And the risk stop, I would keep it as 4020. Once again, this is Cocoa US. Apologies on the error. Soybean oil, on the other hand, looks to be having a possible base formation. So I would actually do a small long if it crosses 50.1 with a bullish momentum and target a 53.5 while keeping my risk at 46.1. So now if we look at what's next for the next week, well, definitely we're looking at the impact of the WASDE report. Friday was a small time only, and I think we will see some market movements and volatilities as the market digests this data and takes more positions. We will look at the overall economic overview and look at the outlook for 2024 based on what the current market situation is. And then, of course, what the trade setups look like for some other commodities or maybe the same commodities next week. So this is where we are. This is where we end this session. Thank you once again for your time. I do hope you like this episode. And we are always looking at your feedback to make it better, make it more informative, and hopefully again see you on the next episode coming next Saturday on the 20th of January 2024. Once again, thank you for your time and wish you all a very good and prosperous trading week ahead. Cheers from the Trade Stylist. Bye.